Yo, what's going on, guys? I ain't gonna lie, I look a little crazy right now. I just woke up, but yo, it's 9:54 a.m. We are trading NAS. We just sold NAS, and NAS is going absolutely freaking crazy right now. If you guys look, I'm up about $7,300 on this NAS trade right now. I'm gonna go ahead and take this bad boy because I'm satisfied with my wins. I'm gonna go ahead and close this out. We'll close out for $7,000 on NAS100 for the day. Closed P&L $7,008. Took a little L earlier on this, just broke even on another trade, but yo, just closed out 7K. I'm gonna take you guys on the charts and show you how we took this specific sell and how we're using something new. Created a little scanner for NAS, US30, all these things. So I'm gonna show you guys how that works, and we're gonna have some fun. Now that we're here on the actual computer, what we're gonna do is I'm gonna be kind of going over a NAS100 strategy that you guys could use almost every day. It doesn't happen every day. You can back test the last couple of days. I mean, today is the 10th of November 2025. Over the last like week and some change, this has happened quite a few times, but this is like a time-based strategy. It could work on US30, it could work on NAS, I mean maybe other indices, I'm not exactly sure. I've only used it on NAS. Today I made $7,000 something. Got out slightly early from my overall target just because it moved much faster than what I expected it to move. So I got out just because when I get those fast impulsive moves, I just like to get out. It overall got to where I wanted it to go. So, and then this is the setup that we took on NAS. Sold NAS this morning. This was the specific setup of interest, and I'm going to explain the ideology to you guys really quick. First things first is we have this zone. This zone is from 2 a.m. my time to, it's really 8:30, I'm sorry. Rule one of this specific setup or this specific market is lining up these 2 points. So right now I'm on UTC -6, which is Chicago. Take a moment and pause the video and do this, because I know there's going to be an immense amount of questions in the chat like, oh, what about for Nigeria? Oh, what about for London? What about for this? What about for that? I don't know the time zones. I'm just going to tell you what time zone I'm on. It's UTC -6 or -6, whatever you want to call it. And it is the 2 a.m. candle and the 8:30 a.m. candle. Okay, so you can either go and find a custom indicator that will drop these on the thing and, you know, highlight the screen in the session, or you can just do what I'm doing and I'm marking it off like this. Once you have this, what you have to understand is these are 2 key points. This is our, so this line is London open. This line is New York open. Why are these significant? This is the start of the range right here. London session is the start of this range time frame wise. This is the start of one range. New York session is the start of the next range, right? Yeah, there's a gap, there's a crossover, whatever. We're not talking about the crossover. We're just talking from open to open, right? Now, from open to open, what happens is there's a certain amount of price action that occurs. You know, it went down, it went up, went sideways, went down, went up, went sideways, 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 sideways. And then eventually it popped and then it went back down, right? Now, in regards to this area, what happens is in the market is once we have some type of trading range that occurs, whether it's Asia range going into London, it might be London range going into New York, it might be New York range going into Asia. There's certain things that happen in every range, right? So it doesn't matter what the market looks like or whatever. It could look like this during the range, whatever. Let's say if the time frame starts here and the 8:30 is here, what we have to understand is there's going to be a high of our range, which in this case is this, and then there's going to be a low of our range, which case is this. Now, here's where the strategy kind of comes and starts clicking into play. Let's just move this all over. Let's do this. So here's where the things come into play. All right, let's say here's the end of the range right here. So we have our high, low, and then there's the end of the range, this specific range. I don't have a name for this yet. It's just London open to New York open. I don't know what I'm gonna call it right now. Don't worry about what it's called, right? I could call it the I don't know method. What? Jokes aside. And this is how the strategy works. Once we find these areas, you wait for one area or one side to get induced. What does that mean? It means that it takes out the previous low or it takes out the previous high. In this case, we took out the low. Now, that's not where the trade is. what we're going to do is we're going to wait for one side of the range to be taken out. And then the confirmations is you need a lower time frame break of structure. Example like this. This was the lower low. Here was a lower high. It made a new lower low. And then here we had a BOS, break of structure. So we have a break of structure right here. So as that occurs, as that happens, what I want y'all to understand is we have this happening. And once we have that break of structure, any pullback that we have or any just breakout of that break of structure that we see, we're going to take a trade and we're simply going to ride the wave and target the previous high of that zone, right? So if this is our London to New York open session, so let's just say this is our session time. So if all of this in here is our session time, this area right here, if this is our session time here, we boxed it up. Here's our box. This is the session time. Here's the low of the session. Here's the high of the session. Once we have a breakout in one direction and we have a lower time frame break of structure and we're going into the opposite direction of the initial breakout. If this was the initial breakout and then we have a break of structure back to the upside, you can either wait for a lower time frame confirmation candle or you just buy on the breakout and then you're going to target the previous session's high. So boom, just like that, right? And this is a model that I've been using. I was doing an Asian session going into London, but I realized that the time frame wise it wasn't working. When I lived in LA, we were doing a lot of London session, early, lower time frame trades, whatever. And they were amazing because, London session was like midnight and I didn't go to sleep early.
You lie.
Right? And I didn't trade New York because New York was so dumbass early.
No shit.
The same concept of trading the old Asia breakout London trades is pretty much this London, New York breakout trades, right? This is the concept, right? Now that we understand the concept, let's take this into the real charts and see what we can figure out. So today off rip, here was the high of the session. And I'll just change the color. Just make it big so you guys can see it. Here was the high of the session and here was the low of the session, right? So now that we've kind of boxed this up, we have our London open, we have our New York open, we have our session marked out. Now what happens is we break through and we go to the upside. Now this isn't where we take the trade, right? And not only are we breaking out, but we're following structure. All right, higher lows, higher lows, higher lows, higher highs, higher lows, higher highs, higher lows. And it just depends on how you see structure. I mean, for me, I don't know if I consider this a deep enough pullback. I consider this a deep enough pullback. So we continue on. Price pushes up higher. Boom. Puts in new higher highs. All right. So structure-wise, boom, and then we have our highest high. So in my mind, this is our highest high point right now. This is where we break structure. So what happened was we came down, price came down, touched here. We kind of wicked it there. It pulled back a little bit. On that little bit of a pullback, I entered on this candle's closure somewhere right around this range. I had the stop loss right here at the bodies of these candles. Because, my thought process was, all right, maybe it comes back and mitigates this candle. If it wicks in, it goes down, it'll be good. Stop loss was somewhere right above the bodies. I don't know if it was right here or right there, but it was in that general range. And then what did we do? You just target the session low, right? And even if you wait and you just enter on like a confirmed break, that's fine too. But as you see this market kind of play out, once we have that structure and we have that break of structure, it's worth taking the risk and, getting in just because of this. So in regards to it, I know this is inverse. Let me just invert the chart real quick. Invert. So, all right, price came up. It made that break of structure. We sold on that breakout there, and then we targeted the low. You reinvert this. What ends up happening is we see the market start moving. It started moving with a lot of speed. I ended up closing my position somewhere around here because I seen this very fast move and I started to see it pull back, and then I started looking over here, whatever. Regardless of that, this thing came all the way and boom. It hit, what did it hit? It hit that previous day low target. It took out whatever liquidity was sitting below this previous low. There's some type of liquidity sitting here. It grabbed that. And then eventually price, went on a big bullish run, pulled back. We had lower time frame breaks of structure. And then, it went and it put in all new highs for today, right? which is cool. It's amazing. It doesn't necessarily matter. But in regards to that, that is the basis of these moves, right? So while I have you guys here, let me just try to show you guys a couple more examples of this. And remember, just pause the video, and mine's on UTC -6. Just go to UTC -6, drop a horizontal line at the 2 a.m. candle, and then at the 8:30 a.m. candle on the 1 minute time frame. Once you do that, you know, you can kind of go through and follow suit, right? But in regards to this, just drop it on the 2 a.m. candle and then the 8:30 a.m. candle, and then click on here and then change it into whatever time zone that you guys use. But in regards to it, here's a day where it doesn't necessarily happen. Price, here's the high of the session, here's the low of the session. You break out in one direction, but look what happens. You had a low, lower high, a lower high, lower low, lower high, lower low. Even though it was deep, this was a lower high still, and it just went and made new lower lows, right? So if that happens, all good. There's not necessarily a trade for that specific day based on this strategy, right? All right, 2 a.m. Here's 8:30 a.m. Same thing on this specific day. We didn't necessarily get a solid break of structure. You know, there's a session low, there's a session high. We come through, puts in a low. I would say structure wise, this is like a straight move down. So it didn't even have any opportunity to break structure. It just went down, right? So once again, not a trade on that day. All right, let's go back to the previous day. All right, here's our 2 a.m. candle. Here's our 8:30 a.m. candle. Here is our, there's the high, there's the low. All right, we had that breakout, and it was just a continuation on this day as well, which is no big deal. You're waiting for it to break out and then come back to the other side of the session. So no big deal. If it doesn't happen, it's okay, because when it does happen and you do get the confirmations, this is a nice, easy setup, right? So boom, here we go. Here's our sessions open. There is the high of the session here. There is the low of the session there. All right, price comes through. It breaks out of the high, comes through, puts in a higher high. Here's the higher low. Here's the highest high. Here's the higher low. It fails to go higher. Here's your first indication that maybe it's changing. Who knows? This is the relevant higher low. And off the break, all you do is you sell the breakout, stops at the high, and then just target the previous day's low, just like that. And, you know, these are trades where, you know, sometimes it happens really quick like we saw today. But even in this case, I mean, this took 2 bars on a 1 hour chart, right? This is something that, whether it's sell side or buy side, it's something that works, you know, and it's something that I'm going to continue to test and see how we can provide better opportunities for, you know, our members in TradeStar. But, you know, same thing, just in regards to a session high, session low. This one was a little bit trickier, but, you know, nonetheless, higher low, highest high, broke structure, sell that. Here's the risk, there's a reward. I mean, in theory, guys, all you really need to do is just, once you have your box drawn out, whenever it dips out of one side, you can just take the trade to the opposite direction. But just wait for a break of structure and then take the trade accordingly. But, you know, we went over 1, 2, 3, 4, 5, 6, 7 examples. 4 of the last ones, there was no trade. Using the rules and the guides that we just talked about, on 3 out of the 7 last trading days that we just looked at, there was 3 opportunities to take trades. There was 1 that wasn't. But with that being said, guys, I hope you liked this video. I hope you got some value from it. Make sure you like, comment, subscribe. Click the link in the bio. TradeStar free signal bot. It just guides you and gives you instructions on how to join our free chat where you guys can get trades and education like this for 100% free. All you gotta do is just trade alongside us. Appreciate y'all watching. Hope you get some value from this. Let me know what you thought about it. Back test it, do whatever, blah blah blah. But thanks for watching. Make sure you subscribe. More content coming soon.